Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Monday, the 27th of January. Starting off with the Vactor, where there's been decent basing by the stock here over the last, 2-3 months or so. Clearly the big neckline there, the resistance is around 22 pence, but you could argue that the stock has already broken through, say, a line running through towards 19 pence. And if that's the case, at least while we're above the 50-day moving average at 17.5 pence, we're looking for a big target here towards 32 pence over the next month or two. Obviously, that is a bit of an early bird situation, given the fact that we haven't quite broken the key resistance on the stock. Next up, what is purported to be a play on the coronavirus, Petroleum. Here you can see that the stock seems to know that today is the day when the whole crisis accelerates a bit. We've got to push through a rising 50-day moving average at 1.67 pence. Initial target, they're obviously retesting that November resistance just above or just around the 2 pence area, but the target here on the longer scale, let's say the next few weeks, up to 2.6, 2.7 pence, which is the top of a rising trend channel from the end of July. Block Energy, a stock which disappointed, it pleased and then disappointed last year. We've had an extended basing, I suppose, since the end of September for the shares towards the 4 pence area. Sideways shuffle along the 50-day moving average, which tends to be a bullish signal. And also, you can see that the RSI in recent days has bounced off the neutral 50 level, which is possibly a leading indicator on a move to the upside. That peak earlier in the month at 5.58 pence, if that's broken on an end-of-day close basis, the shares should be up towards at least the 200-day line at 7.99 pence, and ideally the top of an October rising trend channel just shy of 11 pence. Another situation which is looking quite constructive at the moment, very constructive, is Goalplat. You can see that the shares gap through the 200-day moving average, which is known as being one of our more favoured setups or triggers to move to the upside. We've got a possible 8 pence target there at the top of a broadening triangle that I'm just drawing from July. And that target valid really while we're above that old August peak. That's there at 4.4 pence. So above 4.4 up to 8 pence would be a nice result, even though we've already obviously moved up a long way in the last few sessions. On to another stock which is worth highlighting at the moment, comes in the form of Global Petroleum. Here we've had the big break of the 2 pence area. I think I highlighted the stock before, but recently. But break of the 2 pence area, and looks like it's heading towards the resistance line there, coming down from the the beginning of 2018 at 3.5 pence, and that would make a nice technical scenario for the bulls. You can see also the 50 and 200-day moving averages rising in parallel, which is equivalent to a golden cross buy signal for a stock or a market. A new stock in the near term for the Bulletin Board Heroes coming in the form of Location Services. It's looking relatively exciting on the basis that we had that final vertical move to the downside in December. Decent consolidation since then for the shares, and just breaking a line of resistance running through 1.5 pence for this session, while we're above 1.5 looking for at least a return to 2 or just a 2.1 pence, which was the December peak for the stock. Next situation is a stock which normally anytime it rises, you see it placing the next day, but trying not to be so cynical. We can see that Spirit Energy has actually broken out of a triangle from the middle part of November. It's also broken above a rising 50-day moving average, and the RSI has bounced off neutral 50 as well. So giving it the benefit of the doubt, which probably one shouldn't, this looks like a bona fide setup for at least a partial retest of the glories of November, which I think went through up towards the 0.25 pence plus area. If you're cautious on a stock, which I can understand that some might be, you'd wait for an end-of-day close back above that late December peak at 0.085 pence before pressing any buy button. Stop loss at the moment back below 0.06. I don't think many would be brave enough to risk towards the or below the 200-day moving average on that particular situation. Stock in the news today is Necktown, and here we can see the situation that the shares have actually just they've gapped up, but even though that there's been bullish divergence ahead of the move, perhaps people successfully guessing that there would be positive news, the shares have not been able to break their 50-day moving average at 4.47 pence. But still, while we're above around the 3.2 pence level on an end-of-day close, one could give the stock the benefit of the doubt. Otherwise, waiting for the 50-day line to break is probably the most sensible course of action there. Last stock of the day is Plant Healthcare. Here we've got stock which has been gradually building over recent months and recent weeks and months. Looks as though the shares are in a rising trend channel, which can be drawn from the autumn of 2018. Good that they're holding above the 10 pence level, which was the neckline resistance, actually post-February resistance there for the shares. But the gap higher, and especially while we remain above the 50-day moving average at 8.96 pence, could point to a target over coming weeks as high as 20 pence. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.